Hey everyone, Couch Investor back to another Tesla weekly video for you today. I hope you're all having a wonderful weekend so far. So in this video, we're going to talk about the Cybertruck, Tesla's talk with OEMs with regards to FSD licensing, which is something that they've mentioned close to 3 years ago as well during the earnings call. The 4 points that Chamath made with regards to Tesla's iPhone moment, it's actually a pretty good note. So we're going to talk about that, new price targets, numbers out of China, numbers out of Europe, a little recall, a real recall, not an over-the-air one. And then at the end, as always, we're going to have a look at the graph. So let's start with the first thing, which is the Tesla Cybertruck orders reaching 1.9 million as Musk details of the hook demand. Now, as of now, the Cybertruck has reached 1,943,876 reservations as of July 21st, which by the way is the Belgian national holidays. This is according to a crowdsourced data tracker. So of course, take these numbers with a grain of salt. And again, these are reservations. You can always cancel them. But if you've been watching these weekly videos, you know that at the start of this video, I always show you some little clips of Cybertrucks in the wild. And I think we're getting more and more of those. So we're getting pretty close to production. Then some bad news. So Tesla seatbelt recall affects nearly 16,000 Model S and X. So according to NHTSA's certain 2021-2023 Model S and X vehicles have front row seatbelts that may not be connected properly to the pretensioner anchors, potentially causing them to detach. So Tesla will inspect and connect both first row seatbelts to the pretensioner anchors to specification in order to remedy the problem. If the seatbelt cannot be connected, the entire assembly will be replaced at no cost to the consumer. Then there was also a second one here. So Tesla opened another smaller recall of the 2023 Model S, X, and Y vehicles. This recall deals with the forward-facing camera, which may be misaligned and could cause some of the active safety features such as emergency braking, forward collision warning, and lane assist to become unavailable without alerting the driver. This call affects 1,337 units, and Tesla was able to identify 83 warranty claims and 2 field reports with the issue. Now, very important to note that there were no injuries, death, or crashes related to this condition. Now, let's move over to better news. So Tesla opened to license FSD. Of course, we know this was going to happen, especially after all the Tesla supercharger partnerships with other OEMs. So Elon Musk said during the latest earnings call, we are very open to licensing our full self-driving software and hardware to other car companies. And we are already in discussion with, early discussions with major OEMs about using Tesla FSD. So this was this quarter. Now, if we go to Q4 of 2020, he was asked, does Tesla plan or expect to license any of its software applications, FSD and Autobidder in particular, to third-party OEMs? To which Elon Musk answered, I think we're very open to licensing our software to third parties, and we've had some preliminary discussions about licensing Autopilot to other OEMs. This was again Q4 2020. Now, of course, back then, full self-driving in beta mode was not nearly as good as it is today, and the one today will not be as nearly as good as it will be a couple of years from now. So of course, these talks are still ongoing. I don't know when a partnership will actually happen, because when you partner up, you want your product to be very, very good and very, very safe. Now let's move over to Chamath's 4 points. So he thinks Tesla's iPhone moment is now at hand. Number 1, high interest rates today generally diminish demand. Supply chain inflation increases COGS, cost of goods sold, which generally results in higher end prices. Taken together, these phenomena usually drive lower consumer demand for most companies. But Tesla cut prices and demand grew. While these prices cut eat into the short-term margin, higher demand allowed them to make huge profits because of volume. The takeaway for me is to rationally keep cutting prices to saturate the world with their product. You rarely get the chance to build a monopoly. When given it, take it. Sacrifice gross margins in the short term to drive worldwide saturation in the long term, especially if you can be profitable doing it. Number 2, COGS are now flattening and margins will start going back up as supply chain inflation eases. And as rate eventually start going lower, demand will naturally go up, all else equal. Tesla should then be able to flow as much of these to the bottom line, but if they keep cutting prices, demand will go nuts, while total profitability also still goes up. That's a unique place to be. Number 3, They've struck deals to share their charging networks with other OEMs and now are also in discussion to license FSD. This is Tesla becoming a true platform company that has their apps, well, quote unquote apps, Model S, 3, X, Y. Again, these are just 4 models, expect more in the future, Semi, Cybertruck, Model 2, maybe a van, and so on and so forth. But they will also enable other apps. And a take rate on third-party apps is a very lucrative business. See Apple. Number 4, when Apple ran this similar playbook towards global domination, they took gross margins down about 15 to 20% for a few years between 2012 and 2014, and they kept them there until 2020 or so, and then brought them back up along with prices. The outcome was a $3 trillion company. Tesla's upper bound seems still unwritten, even while they've essentially told us they are going to run the same play. Now, of course, you might disagree with Chamath on other things, but I think here he is spot on. Long-term Tesla investors probably knew most of this already, but I think Wall Street is still, as always, missing the long-term picture here, always focusing on the next quarter or the next 6 months when it comes to margins. And let's be honest, they've proven Wall Street wrong more times than not. Now, after the earnings report, after the earnings call, Tesla stock crashed around 10% or so. Lower production in Q3, there might be more price cuts as well, so Wall Street isn't like that. So here are a couple of new price targets. We've got a price target raise at Wedbush, no surprises there, likes a bit of the spotlight, so from $300 to $350. At TD Cowen, we went from $150 to $200, Truist $240 to $254. At Mizuho from $300 to $330, Guggenheim from $112 to $125. So Tesla weakness would be an opportunity. Another one saying not really getting better for Tesla. And the last one, Tesla offered no clarity on margins, according to an analyst at Barclays. So there you have it. Stock reacts one way. Most of the analysts here were still pretty bullish. Again, most of them are seeing the long-term picture here, the bigger picture. Some are still stuck with ridiculous price targets. Anyways, we're going to have a look at the numbers out of China, more numbers out of Europe from the energy aspect as well. If you're enjoying this video so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers by the end of the year, so thank you very much. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Alright, so the Tesla China insurance numbers for the week of July 10 to 16 reached 10,000, nice little bump from last week, and still this year on track to be a record year. So far, so good. We also got some numbers from Hong Kong. So they reported 678 Tesla sales in June. That was the 22nd best month ever, 7th best quarter ever, and year to date is 40% of last year's total. If we look at the best-selling cars in Europe for the first half of 2023, who do we see here at the top? That's the Tesla Model Y. Now, it was not only the best-selling car in Europe, but also increased sales by 212% compared to the same period last year. Of course, last year, weak supply due to the Shanghai lockdown in Q2, but still pretty impressive. Then continue here in Europe, now comparing Tesla sales in Europe to the total sales. We can see that the overall market share in Europe declined again in Q2 from the previous quarter, but if we look at the BEV share, that has increased last quarter. Looking at Tesla Energy Storage deployment, they already deployed more storage this year than the whole of 2022. Again, the Tesla Energy side of things is still being overlooked by the market. We also got some more positive news out of Australia, so Tesla Megapacks included in NSW's latest giant battery approvals. And by the way, this is all happening with just one Megapack factory. And so seeing the numbers for Tesla Energy, the revenue going up, cost of revenue going down, and so net income continuing to go up right now, I mean, this is the start of a beautiful story. Last thing here, this is regards to the finance options. So Tesla has launched an 84-month financing in the United States. Now, of course, the estimated APR here remains to be seen what your credit rating is. Now, if it stays at over 6% or so, some might say I get better returns in the market, so I don't really care about that. But to be honest, yes, you're getting 12 months extra, so your monthly payment becomes smaller, but it's still pretty high, especially with the high interest rate environment right now. So in my honest opinion, just wait until the rates go down. So last thing here is the graph. As you can see, the red line here did not serve as a type of support line. Currently, this is on the weekly. It got rejected there after that earnings report, got under the 20-day moving average, and maybe next week we might be on our way to the 50-day moving average at around $240 or so. We had also the Fed meeting, high expectations for another 25 basis points rate hike. Remains to be seen what happens there, but overall, Tesla, just like other high-flying companies, high-flying stocks, needed a little breather, and this is what makes a healthy market. So don't be surprised if we're seeing more red days or so throughout this earnings season. We've had a tremendous first 7 months of this year. And so to conclude, another eventful earnings week with regards to Tesla. All in all, the company is doing extremely well. In my opinion, the future is bright. Of course, I would love to hear your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and see you all in the next one. Bye-bye.